Okay, guys, NIO reported just a few hours ago. They reported a 44-cent loss per share versus expectation of 26 cents loss per share. And they reported revenue of $2.329 billion versus $2.462 expected. So they missed on both profit and revenue. Let's see how the stock is doing at the second 1 hour after opening, down about 5%. Now, NIO, as you can remember, it's one of these hype stocks back in early of 2021. This is when ARK and all these hypesters were all high flying. Go watch our videos back in the day when we warned and said, be careful. This is not safe for investing. It hit a high of $66, basically $67 back in January of 2021. And it is currently, I think, at a low, Mo. Is it?
The stock price is at a low?
No, it's basically there.
Oh, wow.
October 24th of 2022, it was at $8.38. It's currently at $8.91. Mo, what do you have on deliveries?
So deliveries came in. I mean, they grew throughout the year. You can see, I guess they shrunk in the second quarter. But they started out with 25,768 in the first quarter of 2022, ended with 40,052. For the full year, they did 122,486.
Oh, wow.
So that's a lot of cars. They beat expectations by 30. I mean, they beat 2021 by 34%. So it seems like it's getting better for them. That's good.
Yeah. Gross margin in this car, 14.4% right now. You know, it's interesting. Rivian reported the other day.
Yeah, they reported yesterday.
Terrible. And they still have a negative gross margin.
Yeah.
A negative gross margin, guys. A negative gross margin. That means for every car they sell, they lose money. Forget about the bottom line. It's before they pay overhead and tax and all that stuff. What just made you go like...
Gross margin was 3.9% in the fourth quarter compared to 17.2% in the fourth quarter of 21. So that shrunk a lot.
Wow, why is that?
Maybe costs of
commodities, etc. So remember, Charlie Munger was bragging about how BYD didn't discount any cars.
And they increased their... they didn't discount cars. They didn't increase sales. They increased... What did they increase? Let me figure it out.
Talking about BYD?
BYD.
Yeah, so
I
maybe...
I read a stat on it and I was like, oh my gosh.
But if you look at Tesla had to discount their cars in the US and in China.
Yeah.
And that was Charlie Munger's bragging point about BYD, a company they had invested $270 million into. And I think they're exiting their position, or they're very close to it, at like $8 billion. So that might have been the reason for the big drop in gross margin. Because remember, guys, gross margin is essentially what do you sell the car for? And then what does it actually cost you? All direct costs. So if you sell a car for $50,000 and with all labor materials directly attached to that car, it costs $40,000. Your gross margin is $10,000 divided by the price of the car. So 20% there. Okay? That's before overhead costs, that's before any income taxes, etc. That's what gross margin means. So this company is having a hard time. Obviously, okay. I mean, they lost $1.57 billion in the last 12 months, not including the fourth quarter. Let's see here. Let's see if they're issuing shares to pay for these losses. How are they paying for these losses? Yep, they're issuing shares. I mean, that's how you have to do it. Guys, when you have losses in a company, there's two ways to pay for it: debt or equity. You either have to borrow money to pay for those losses, or you have to issue equity, which is issuing shares. When you issue shares, you're diluting the investors that have already existed in the business that trusted you from day one. Dilution sucks. There are a lot of people out there, a lot of value investors who won't even invest in a company unless the shares outstanding are less than they were in the last 10 years. Yeah. At least what they were, I mean, at most what they were in the last 10 years ago. What'd you find, Mo?
Oh, I'm just looking at, I pulled up the 8 pillars and I was like, well, that's ugly. So then I started looking at their cash flow. Their cash flow it's positive. It has a check, I should say, but it's all over the map.
Yeah, it's not positive. It's just grown.
It's just grown a little bit. It's all over the map, though. When you look, especially when you break it down quarter to quarter, there's no consistency here. This is a very, very difficult place for me to say I want to make an investment in this. This is pure speculation.
So that's the thing, guys. When it comes to companies, we look at when we buy a stock, we're buying a piece of a business. If I were to tell you right now, if your neighbor has a mechanic shop and said, hey, I want you to invest in my mechanic shop, what are the first things you're going to ask? Show me your financial statements. How have you done in the last 4 or 5 years? How do you do during bad times? What's your balance sheet look like? Who do you owe money to? How do you pay yourself? How much has your bank account increased? It's no different buying a stock. You're buying a business. So you should look at it the exact same way. And once you realize that, once you understand that that's what you're doing, their next goal is to put up with the fluctuations in the market. Now, this stock has gone from a high of 67 down to a low of 838. That's a big, big drop.
Yeah.
But the question is that drop justifiable? Is it an opportunity to buy? Well, guys, that's the hard part. Company, go ahead, Mo.
Even at this price, I don't know.
Yeah.
That's the thing.
This is a $15 billion company. If I were to ask you to spend $15 billion on a company, what would you want it to make per year to justify that?
Yeah.
Right?
And honestly, what surprises me about this, I just pulled up analyst expectations. I'm not even looking at the numbers yet. I'm looking at the number of analysts. I mean, you would think that for a company like this, you would have a lot of analysts projecting out. It drops from 29 at the end of 2024 to 2 at the end of 2026.
And big jumps in the EPS.
Huge jumps. I mean, revenue's big jumps too, but even analysts who get paid to do this don't even want to put their neck on the line for this thing.
So, guys, when it comes to NIO could be the car for China. It could be absolutely the best thing that happened in China. But if we don't understand the investment, we're not here to make investments on the hope and prayer that it goes well. Now, if we saw a path to profitability, you may very well do your research in this company and say, no, I see the path to profitability. And yes, they're going to lose money for the next 3 or 4 years. But after that, the profit's going to be huge. It's going to make up for it. Great. But for me, what I looked at is, where is the company today? And can I foresee where it's going to be in the next 5, 10, 20 years? No, I can't. It's really, really difficult. It's difficult on all companies, but there are some companies like Apple or Microsoft where you go, would I be surprised if NIO was gone in 5 or 10 years? I wouldn't be shocked.
I wouldn't be shocked.
I'd be like, okay.
Yeah.
So that's why for me, I look at it going, it's too speculative for me to pay $15 billion for it. Now, if you told me, Paul, it's $150 million, 1% of that, okay, $6 billion in revenue. Car businesses tend to go for 0.5 to 1 times revenue. This is at 2.5 times revenue. It's just too hard for me. So for that reason, to pull a line from Shark Tank, I'm out. But guys, if you like our software, we have a special running, $7 for 7 days. Check it out. This will definitely help you. And this community helps you become a better investor. It is well worth it. Check it out. $7 for 7 days. Everythingmoney.com.